Hey everybody, welcome back. Well, wild day to say the least. Now what we're going to do is just mark off the 21st so that you can see these levels right here on when this started, and this is midnight, and we're going to rock and roll right into this. This will be unedited for time's sake, and there's a lot to cover in a short time to do it. So around 10 o'clock, we're all waiting for the non-farm payrolls revision. Now this is going to tell us how bad things actually are out there. And it turns out that things were worse than anticipated. Now, we lost 800,000 more jobs than we thought. We were looking for roughly a 300,000 number. Goldman was closer to 1 million. They were the only one that was close. So we sell down when they don't come out with the data. Then they come out with the data and they rip us. And then they just kind of dump on our hopes and dreams right in here. And you can see how that went. They give us the old H. And I just want to point something out because we're going to go through a bunch of stuff, super technical stuff today. This is exactly what they've been doing, where they dump on you. They give you the old H, the H breaks, and you're like, oh, well, that's it. It's going to break. It broke the H. And then they just reverse and they rip right back in your face. Now, the other point that's interesting is right around here at 1 o'clock, they had the 20-year bond auction today. It actually went fairly decent, sold down, and then we rallied into that. And around 2 o'clock, we had the minutes, and you see the little spike there at 2 o'clock on the minutes. So you had some really big data points today, 3 in fact. And what happened today? Like, what really happened with those data points? Not a whole heck of a lot, and we're going to show how we worked off the overbought here in a second. But we're going to just zoom out because I think this is really important. And again, you're going to have to deal with the unedited version of this. We talked about this 50% line, and we talked about measuring this move from the 20th down and how we were flipping that 50% line. We talked about it this morning. Then we get the huge move up, the retest, and the undercut on the hourly. And then what's it do? It just stops. So once it stops, then you start pushing higher to the high of this. Does it feel like the market was lifting today? And this is exactly what they tend to do in this environment. Now you're broadening out, and you guys should probably see that. Anything that had a yield went up today, and we're going to get into those sectors as well. But this bar remains in control. So what I would do, and just to make life easy, is I'm going to clean all this off, and then I'm just going to drop a line for you right there on that hourly. And I'm going to drop a line right here. Now for those that watch these videos, they'll know what I call these. So I call these control bars. And the reason they're called control bars, or I call them that, is because they're in control. Whoever is whacking this thing around that's in this range, they have been in control since Tuesday at 10 a.m. You're not able to outlier. Now, what do I mean by I need an outlier? I need something to happen here. Well, what is that? Okay, I need it now. I do want to point out some things. If we take a look at the ES on the hourly, we were overbought here, and we have worked that off, and we are now holding that 50 line. Now, that's going to look a little different than because the SPY in and of itself, if we just go to regular here and put that in, and let's clean all this off for a second, my 1,000 lines. You can see how you broke right here, and that since then, nothing's really lifted and held unless it's got what? A yield associated with it, and that's where we flip. So how long can we stay up here? Well, you can stay overbought for a very long period of time, and that's what a lot of people don't realize. You can really stay up here for some time, so we're going to watch and we're going to see how that goes. Now, if we look at the top of this, I don't see any reason to think that we're going to do anything before Jackson Hole. What's the catalyst tomorrow? And we really don't have anything. So you're probably going to have a pretty slow day tomorrow, and then they're going to want to see what Jackson Hole does, and then you're going to kind of grind sideways. Now, if we take a look at the Qs and look at it the same exact way, and what I'll do here is I'm going to mark this off, and then I'll mark it back up so that you can see. Well, we got through a couple key levels, and I would start looking at hourly charts here. I think you'll find those very helpful. Here was your breakout. You tried to lift, retest, and then lifted through that. And if we zoom in on this, you'll see what I mean. So I do think there's some value in watching these levels, that's for sure. But when we really pay attention to it, well, you can see that very clearly how that's playing out, right? You can see that level and how you held it, test, retest, and now you're above it. At the same time, you're rolling here on the RSI, it broke our moving average, and I'm following up on what we went over yesterday. Now, if I bring it down to here, which to me, this was that major level coming straight across, and it fit perfectly with what I was referring to earlier with the neckline, left shoulder, head, right shoulder. Let's just mark that off again really quickly so that you can see it. But what we're looking at here is we're looking at left, head, and then right shoulder, breakout neckline, and then we push. And that's exactly what we've done here. Now, what do we do about this? How do we handle this? Well, there's not really much to do there, is there? What we have to do with it is we just have to put ourselves in a position and say, okay, this is certainly something that's there. Doesn't mean that we can't come back down and retest it. We're overbought here a little bit, and this is how we're acting. How is the rest of the market acting? We'll get to that in a minute, but look at this. This is the 4-hour, and this is telling you that you could just still keep going. So I think you have to look at this from two different ways. I think you have to look at this dependent on your time frame. And if you're looking at this as you're just, hey, I'm a long-term buyer, and that's how I'm trading. I'm a long-term buyer right now, and I'm just looking at putting some things on for a swing trade. Okay, so if I look at this right here, and then I'm going 1, 2, 3, I broke out, and now I've got another doji on the Qs, there's very little to say or to do. You could make the argument about there's no volume, but there's never any volume this type of year. This historically is the 2 worst weeks of the year, right before Labor Day. So we understand that this is the worst time of the year. We know that. We understand how this is acting. And we can see our crosses, and we can see how the 55 is pointing back up. So there's not really much to say unless you're looking at this from a different time frame, meaning if you are more of a shorter term trader, then you're going to look at this a little bit differently. Now, I don't see much to say or do about the Qs. Now, if you drive into this on the SOX, do you see anything here that's really relevant? What we have are a couple levels. And I think that what we're dealing with now, as I'd like to talk about the stool, I'm going to clean this off. And then what I really want to talk about here is, you have that macro picture, right? You had 3 macro events. Now you have some fundamental events this evening. And overall, I thought they were decent. And Snow, I mean, basically the dumpster fire of all conference calls. I mean, that guy, had the personality of a snail. But just didn't really seem like he was that enthusiastic about his company, and it showed in the pricing after hours. But if you look at this, and you'll see that that's kind of how I view the world, where this is the stool that you're sitting on, and then we're trying to figure out which way we're going to go. And then from here, you have your macro, your fundamental, and your technical. And then this becomes your neckline. So if we're looking at our neckline right here, and we can see that we got to that, and now we're unable to get through that next neckline, which is more of a major neckline than anything else, that's really our demarcation line for now on the SOX, and that's what we have to respect. Did this and zoomed out and said, okay, well, what's the daily look like? Well, the daily looks like it's about ready to rip your face off. So I think that it depends on your time frame, how you're going to feel about the market. How do you feel about NVIDIA today? And I think that sticking with the technicals really is the way to go here. We're going to do some fundamental work, but I do think that it makes the most sense to just deal with the technicals today. Inside bar. Dojis are what? They're signs of uncertainty. So we're looking to flip this tomorrow. I'll tell you exactly what I'm looking for tomorrow. And I added to this today again, and I added to it pre-market. It has not really failed me yet. I mean, everybody was like panicking yesterday with like weak paper hands because God forbid the stock went down, but worked out fine, didn't it? So right here, you're at 29.35, and that's what I would watch tomorrow. I would see how you act at that level and go from there. Obviously, 30 is going to be the key because you had the sellers there. Maybe they're trying to pin you there for Jackson Hole. Now, I said we're speaking technically. I don't know what he's going to say or do. I don't have a clue. But if I look at NVIDIA and I look at that chart, now if I drop this to a 5, look at the games and the shenanigans that were going on today. I mean, it was Shenanigan City. And I think that that's important to get, where you have these levels and it's like, oh, we're going to break out. Even here, that's a classic breakout where here's your previous day high. You push, you reverse, you break out, you get your confirm bar, and then they reverse, undercut here, and then you're like, oh, surely we're going to break. No, and all it does is this, and it's just driving people mad. And really who benefits here are people that are just contra traders, where they're buying the lower end of these ranges, and then from there, they're just making decisions on what they're going to do. They're the people that are benefiting the most here, and they're the people that are probably going to benefit the most. So that's really how I see it. And I don't think there's much to do about that except, you're buying the dips and you're selling the rips. Sometimes it's going to work, sometimes it's not. Where I know Apple today, I had a day trade in, and I have a really good trade that I want to walk through here, but I think we're going to have to do it at another time because I really want to keep this one short and to the point. I want you to focus on these levels because if they don't hold, you just got to get out of the way. And you saw that today. You saw these selling over and over and over again, where 1 minute and 10 minutes, this is a multi-trillion-dollar company, guys. 228, 225, 90. And if you're swinging in this environment, you can't handle that, and you're not trimming on the way up, you're just going to get cracked. I mean, you're literally just going to get cracked on this market. So retest, and now you're going to want to watch this level tomorrow. And if it holds here, great. This might be an area to buy, and then see if it's going to push. If you look at this on a daily, this is pretty much how these things end, right? So clean this off and you'll see it. You have a doji up here. No one ever thinks it's going to go down. So that's why they found the capitulation buyers. And then that's it. Then you get the doji and go from there. So they did make life very easy for you here with the doji. Now let's get to a couple other names out there. For example, Snow. I'm going to be blunt. I did not think that this was that bad. I thought margins were okay. I think there was a restatement of revenue after hours, and I don't think people pick that up. But what they picked up after hours was this conference call, which was just an absolute dumpster fire. So they just did a really poor job on the call. And you can see what you're doing right here. You're trying to hold that wick. Whether or not you're going to remains to be seen, but you did break down. Now you're trying to flip it. These are great areas to look for change in trend or continuation of trend. In other words, if you hold great, you're probably going to grind. If you break that, that's a long way down. The easiest way to measure these, I always get asked, like, how do you set up targets? You look at the H that formed and you take the peak of the H to the neckline. So the peak of that H is going to be right there, and you take it to the neckline right there, and you get roughly $5. Really, the true way to do it is just say, okay, it's 4%. And so you would take 4% from that line. So all you're going to do is go here and go, okay, I need that from 4% down, and that's going to tell you roughly where you would be. In this case, it's going to get you right around that $5 as well. That's the easiest way to do that, easiest way to measure those off, and then you kind of go from there. I really think that they should have done a much better job on this call and explaining this, but we'll see what happens tomorrow with it. I did not think it was a bad call. I think the conference call really did not help them. So maybe you'll flip here, maybe you'll get some love after the call, but in listening to parts of this, I had to get off just to record this video. It's not good. And, I actually did a trade right here where I bought this dip after I started seeing it hold. And I trimmed, and then I just used this as my stop on the rest. And it's just, to me, it's pretty clear, like, you're a wing and a prayer right here, right now, hoping that something is going to just save you. And, we all know what happens with hope. So at the time recording this, there's just no reason for me to even be in the name, right? Just closed it. But I didn't think it was that bad. Now, if you compare that to how some of these other names have acted, PANW did exceptional, and they had really good earnings. So if we start looking at these levels, did it give much back? Let's clean off this price for a second. Look at that. Look how you held it here. And so that takes us into this other sector that seems to be moving, right? It's a great segue into this, where we have IGV, which has not stopped. You literally have not had a lower low since here. And not one bar has had a lower low. And now we have highs where, and I think this is really important, the SOX did it again too. I would be looking, if I was struggling in this market, and this is how I've been trading it, I've been doing okay with it. Like, take a look at like FNGU, and after hours it'll be down a little bit here, but FNGU held in there today. Take a look at SOXL, okay? Higher high. TQQ, okay? Higher high. Now, why is that? Because they're broadening out what they're buying. So instead of you going out there and trying to figure out which name, these 3X ETFs are making life super easy for us. So that's where I think you should focus. I think you should focus on these ETFs. I think that that's the best place for us to spend our time. And I really can't stress that enough. I really can't. I think that that's where you should be spending your time. Like they're working. They just are clearly working. And it's so much easier than trying to buy this breakout right here and then realize there's nothing behind it. And I don't know. I mean, you guys can comment below. For those that day trade, how many names did you trade today and then the bottom got pulled out? And we saw that over and over again. Even stocks that looked like they were going to constantly keep ripping. Toll Brothers had an amazing day. Earnings were really good. Anything that has a yield associated with it just crushed it today. MO. Take a look at this, and you can see how you're hitting highs here. No one's even talking about it because they find it boring. But if we take a look at names like MO, BTI, look at these names. Okay, VNO, look at this, how it's hitting multi-year highs today. So we're seeing this over and over and over again. You're going to start seeing with a lot of these names. SLG is probably the next one to go. Especially REITs. These REITs, look at, they're all ready to push. And that's where I would focus. I would be focused on things that fit the interest rate theme. And then I'd be looking at trading the tech names, but maybe trade the tech names as a group versus trying to figure out what's the one that's going to, lift you away. I can't stress that enough. I find that pretty exhausting today because, you think that you're going to rip, right? And then what do? They just drop the bottom out of the market. I think it's very important for people to kind of get that sense of it. And that's really what you see happening here. So, and of course, there's going to be those high flyers out there. You can see the TEMs of the world. And I want to go through this because this is important. These kinds of patterns, like these don't end there. I looked at this on Saturday, made a couple dollars on it, but see this bar? See how you came down here? And then this bar encompasses that. That's all price rejection. This all filled that price rejection. The only thing that really bothered me about this name today, candidly, was just the fact that it put me in a position where with something like this, the spread was like $1.50, $2. So it made it very difficult to try to get up and in that kind of market today. And I wasn't willing to take that kind of spread risk. But that's not a trade that's over by looking at that. And again, this is why I wanted to get technical and just look at some of these charts. This does not look like it's over. Now, you might not like the pattern, but the fact that you cannot make a lower low here, tested key levels, and now you're back testing this high, Now you have a doji, you're going to want to watch that. Watch this on a 1 minute bar and take a look at how we got to key levels today and held. And I think that this is pertinent because I think it bodes well for the whole market. Names like this should be getting smashed. And instead, what you're doing is coming to certain levels and holding. You even saw it down here where you're getting to not so much there, but coming across, if you look at this from a longer standpoint, like right here, look how you got to that level. And what'd you do? Test, held, test, held. Like names that are going to crack, they go through that like tissue paper. And this didn't do that. So again, this is really important to get. It's very important for people to understand that stuff because if you're seeing it here, it means that the market in and of itself has a bid. This kind of stuff, the speculative stuff, if we were going to crack, this is the stuff that's going to crack first. So if we're not going to lose these names and we're seeing rotation into the IGV, which you are, like you start looking at now, this name, did we close at an all-time high today? Came darn close to it if we didn't. And you're seeing, again, we're talking about these names all the time now in the pre-market public video. Look at these names. That's why I think it's important to go through the technicals of this today for people just to kind of go, oh yeah, it's all the IGV names. They're the ones that are moving now. And that's where the money flow is going. Now, how does this going to fit in tomorrow with Snow, with Oracle, and some of these other names? I'm not really sure, but you can see once again that all Oracle's been doing is just lifting and grinding and pushing higher. But it's not just the IGV names. I mean, look here, look at IBM, for example. Here you are, and IBM's flipping here. Take a look at this. Does that look like something, that you should be worried about? IBM's hitting all-time highs right now. So the market in and of itself is strong, right? And this is being extremely resilient here. Okay. So we understand that the market's being resilient. We understand that money is flowing in there. But look, it's also anything interest rate sensitive. And again, I really want to stress that. And I think that's what was really important about today. What I wanted to do was just spend time going through these. If you're interest rate sensitive, you might want to look at it, and that goes yield or anything else. We bought this cheap a while ago in like the low 30s and really have done not much with it. Test failure of that level. You can see it right here, test failure. And all you're doing is building. That's all you've been doing here. Look at these moving averages. 12, 22, 55 is what I use. You should use what you're comfortable with. But now I've got a breakout and I've got to test, the retest, and then the breakout of it forming a flag. Something like this, you're looking for this to head to that level. So where I see tomorrow is I see light volume going in the Jackson Hole, and I really see this interest rate theme trend continuing, but they're also doing the build out theme, which is all the IGV name. And I think that that's where you should be focused. That's it.